This is Alan Bush with the Daily Financial Forecast for Tuesday, July 26th. Starting out with the stock index futures, we are seeing prices mixed to a little bit better, seeing some evening up, it appears, ahead of the Fed meeting, which is a two-day meeting today and tomorrow. Most likely the Fed will not be changing interest rate policies at this meeting. Also, we do feel that longer term, though, the main trend is still higher. Once the Fed meeting is out of the way, I think we can see a new move higher with the major indices advancing to new highs, especially the S&P and the Dow. So nothing really changing in our long-term view. The main trend is higher for all of the major stock index futures. Now, moving over to the currencies, seeing the dollar index a little bit lower, although we did see a breakout over the last week or so to the upside from a one-month congestion pattern. Fundamentally and from a technical point of view, it appears that the main trend is higher for the dollar index, since the Fed is still the only major central bank that is on track to raise interest rates, although it may not be until early next year before the Fed is actually in a position to raise rates. Also, we are seeing the pound holding up relatively well, even though a Bank of England policymaker indicated that he wanted to see an immediate easing of credit or some type of new stimulus. So that initially put pressure on the pound. Some recovery, though, is the pound now trading back to unchanged on the day. Either way, though, it does look like the Bank of England will be lowering interest rates at their next policy meeting, which is scheduled for August 4th. So it's going to be very difficult for the pound to sustain any rallies, and any gains should be used as a selling opportunity in the pound. Also in the yen, higher prices there. This after the finance minister in Japan basically indicating that they may have a bit more of a hawkish view, or I should say a less dovish view, although the Bank of Japan holding their policy meeting on Friday, and it is widely expected that there will be more stimulus. It just possibly may be less than some had anticipated. So good gains in the yen on the possibility of somewhat less stimulus money. Now, moving over to the interest rate futures markets, we're seeing basically a mixed trade as traders even up ahead of the Fed meeting. Longer term, though, we feel that inflation globally is likely to accelerate, and that should be a limiting factor for the interest rate futures markets, even though central banks, other than the Fed, are likely to add more stimulus. That would be the Bank of England and the Bank of Japan. So that is a limiting factor long term. Inflation likely to be a problem, not quite so much now, but down the road over the next couple of years, which brings us to the gold and silver. Inflation, as we believe, will become a problem, not a problem now, but will be later in the next 3 to 5 years, and possibly a very big problem with all of the stimulus that we are seeing. Bodes well for the long-term outlook for gold and silver. Any breaks in those two metals, the precious metals, should be viewed as a buying opportunity, and we have major support in the gold market around the 1315 to 1320 area. And we do believe that we are in the very early stages of a very long-term bull market for both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.